Good morning, everybody. Welcome to the Game Plan. My name is Gareth, Soloway, Chief Market Strategist here at VerifiedInvesting.com. We're going to discuss Nvidia's earnings. We got some economic news out this morning, as well as some other earnings, plus some technical levels that are on watch on this market. Let's dive right into the action. Let's go over to the big board and take a look. What do we have here? All right, so this is basically yesterday's price action early in the day. We saw that big sell-off early, and then the markets kind of floated back off of those lows back to close basically flat to negative. Notice this candle here after hours down to here. This is when we got those Nvidia earnings, and Nvidia kind of was chopping around trying to figure out which direction it wanted to go. It was initially down, then it was up, then it was back down, and this morning it is back up, but just a little bit. What's interesting about this is probably the most anticipated earnings report that we have had all earnings season, and it probably was the most lackluster. Very little movement. Nvidia's up maybe a couple percentage points on the day. Nothing to write home about there. Now, we did get CRM, Salesforce, that did flush a little bit there, and then Snowflake did come back up all the way up, and that's having a big move as well, but neither of those companies are big. Now, basically overnight, this was the action. This morning at 4 in the morning, the futures had started to rally. So yesterday after hours, this was after hours up till about 8 p.m. Eastern time, and you can see the markets were kind of struggling. That's because Nvidia was actually down at that point. By this morning, the narrative shift amongst the mainstream media had really started to talk up the positives about Nvidia, and that's where you had Nvidia up pre-market at 4 in the morning, and the S&P was up as well. We went higher here, and then look at this dip right here. All right, I'm going to tell you exactly what happened here because this is a big deal, actually. A lot of people won't think it's a big deal. It is. So number one, we got jobless claims. Now, jobless claims for the last 3 months have been around 220,000. The expectation for today on jobless claims, and mind you, these are people filing for unemployment, was 222,000. Okay, that was expectations or forecast. The number came in at 245, basically, all right? So it was hotter than expected, the highest number in 3 months. Now, I've told you guys this before when I've talked about these numbers. This does not really raise alarm bells just yet. It's more the jump that's kind of surprising. But 245, if we stayed right there, it wouldn't be that big of a deal. The big thing starts, and what you should do is start paying attention if this number gets over 250. If it gets over 250, that's a kind of a yellow light flashing. If it gets over 300, that is red. That is bright, bright red. And what's interesting is you actually don't have the government layoffs coming in yet. So this is without government layoffs. Initially, I was like, oh, well, maybe it's government layoffs starting from Doge, all this. No, that's not happened yet in these numbers. Therefore, you wouldn't include that. So you have to assume that will jump the numbers up in the coming weeks as well. The other thing is a very kind of not promoted inflation gauge. We got GDP revisions today. There's something called the GDP price index. And the price index, it's not talked about a lot, but it does tell us based on the basket of goods within GDP where inflation is. That was expected to be 2.2%. Okay, it came in at 2.4%, one of the biggest jumps we have seen in a long time. All right, so what do we have here? We have jobs data starting to go badly, and we have inflation continuing to go up. That is not a good recipe. And listen, the markets are still holding on to some gains today, but that explains why we got this dip here in the pre-market on the S&P. So again, inflation continues to peak up or inch up. And remember, tomorrow we have the PCE data. So the PCE data is the favored gauge of inflation. So that's going to be a big one. I'll discuss that tomorrow because it will be out by the time I do the game plan. Okay, let's go to the daily chart. So what do we know about here? We know that the S&P remains holding technical support. So while the NASDAQ has broken and confirmed below the upsloping trend line going back to last August, we know here we're still holding this line, right? So again, you can see right here, and actually this line even goes back further, but I would have to zoom out so far on the chart that you guys couldn't even see what I'm talking about here. So we see right here, we are still holding at this time. Watch watch this as your next big indicator on the charts. If this breaks and closes below in the next few days, tomorrow, next week, whatever it may be, and then confirms, now you have the NASDAQ confirming below a major trend line and the S&P. And that would be a big factor to continued downside in the markets. Right now, we could kind of float back up. I mean, that's always a possibility, at least on this chart of the S&P. NASDAQ's in a different position. The NASDAQ remains weaker than the S&P overall. All right. Let's get back to the action here on the charts. We have a bunch of movers pre-market. We'll have to take a look at Nvidia first, even though, again, it's just not a big move. This was that. Notice this candle right here. Remember the spiders candle, the S&P candle in the after hours? It's almost identical to this. And then you could see, again, yesterday after hours, we were kind of chopping. Then Nvidia rallied up. Then it came back down. And this is 8 o'clock at night right down here, right, where the after hours action stopped. Then things picked up at 4 in the morning here, and Nvidia started to rally up, and that helped the S&P go up, and then we've seen a little bit of a fade here. But all in all, Nvidia is up maybe $2 to $3 on the day. It's not a big move whatsoever. Now, yesterday on earnings, I was looking at these levels. I was saying, okay, well, if we rally here, here's resistance. If it gets through there, you have this resistance. Here is support. None of them hit. It was that lackluster of a report. The only people that got really screwed on this, let's be honest, were options traders. The options volatility or implied volatility was 8%. And again, just so you guys understand what 8% implied volatility, it means that if people are buying options for Nvidia's earnings, they're paying, basically needing an 8% move in the stock at minimum to break even. If the stock doesn't move 8% up or down, puts and calls, then essentially they're going to lose. They're going to lose money. And so here, the people that got screwed were the options traders that took that bet that there was going to be a major move. They paid a big premium. They're not getting the results from that move. All right. On we go. C3 AI reported earnings yesterday after the bell. It dipped initially, then rallied back up, and is kind of down just slightly. Not a major move on this, but still negative overall, trading at 24.50. We can see right here, this is where it closed yesterday, and you can see right here it's trading down in this range. In terms of a technical level, there isn't a whole lot unless it were to really flush down to about 1910. 1910 would be a great double bottom. Aside from that, I don't have other levels. CRM. Now, CRM, look at this level right down here. This is a level that CRM dipped on earnings yesterday initially, and then look at the bounce. Now, if you're a member of Smart Money Stocks and ETFs, all right, we added in the earnings trader to that service among many other services that are now all under that one service. It's an amazing. You got the dividend trader, the small cap catalyst for small cap traders. I do the swing trader, which is the normal stuff I always do of swing trading stocks. And you have the earnings trader and the ETF trader as well. But the key is the earnings trader, they're live sessions where I, with my fellow pro traders, we trade these earnings results. Well, going back to the chart here, I had a level here in the after hours, and sure enough, we bought this in the after hours right down here in the earnings trader, and it popped right back up. I wish I waited patiently for this. I did not, but we still took a very nice gain off a technical level. Just showing you guys the daily level. See this area right here and this upsloping line? Notice them converging. Beautiful right there. Just a perfect level. Big sell-off initially on CRM, Salesforce, and then the bounce afterwards. All right. Snowflake, we also had a trade on Snowflake. Dr. B picked up this one, shorted it right up here, took profits right down here. It was a great trade there as well. Snowflake is having a big move near 190. Now, on a technical basis, the first level you're going to look at is going to be this area here around 193, give or take. That'll be a high-risk level for me because, again, the stock is strong and the markets are green today. If we were to really blow through that, I would start thinking about this 211 to 210 level right here. All right, this would be my next level, and I'm going to show you one other reason behind it. If we take a Fibonacci retrace and we drop this down to the lows, notice the 786 Fibonacci from this high to this low is right at that same level. And so what that does is it gives me additional reasons or factors, as I call them, for why this should be significant resistance for a potential short if Snowflake were to get up there. Other stocks moving this morning, take a look at eBay, just getting crushed on earnings. You can see, again, stock closed yesterday around 70 bucks, down to 63. If we look at the daily chart, the stock was in rally mode, so it's not surprising to see a big sell-off. I will be watching very closely today in the live day trading room, this level around 61 to 60. right down here as well at 60 bucks. So that area there, 61 to 60, will be an interesting level to monitor. And then if it gets through that, you're looking at really about the 57 level right here. Notice this trend line here, right through this top, through this area right here, and across, all right? So again, interesting stuff. I do want to cover Tesla real quick, guys. I do have a big area on Tesla I am monitoring. I'm going to go to the big board to talk about this. So Tesla's really struggled, and I think this is a good case study stock for us to understand the hype, the drive, and then what ends up happening, right? Because so many stocks do this. They have these mega runs. Rigetti, same thing, ran up to what, 20 bucks, and then it's back to sub 10 at this point. But the point being here is when the elections occurred, because of Musk's orbit around the president, what we saw was this massive move up, just an incredible rally to the upside. That is now being unwound. Part of that, obviously, is that sales are suffering dramatically at Tesla. EV just in general is struggling. But for me as a technician, I always say, okay, there's levels up here to go short. In fact, we had a swing trade in smart money stocks and ETFs that was short up here, but now we're getting to levels where I want to go long. Now, a lot of people have emotional feelings towards Elon Musk. They either love him or they hate him, right? For me, I don't care. Why? Well, when it comes to trading, I just trade the charts. I just want to make money. Like, I don't care about this. Are all noise. Everywhere around you, there's always going to be noise. And people that can focus and separate themselves, especially when it comes to trading, they are the ones that are going to make money. So whether you're short up here, which was the right move there, obviously, or now coming into this area here, you can see right here, we have some major support around 270 to 265. You have an upsloping trend line here, right? And mind you, these are swing trades. These aren't long-term investments for me. I trade them and then I get out, right? But the idea, there's also a Fibonacci 618. If you take your low here to your high up here, this is also right in here, the 618 Fibonacci. So you now have three factors on that, isolating down between 270 and 265 for Tesla. Now, Tesla is up a little bit today, but the idea again is, and what I want to always be encouraging you guys to do is avoid the hype, avoid the emotion, focus on charts, which allow you to make logical decisions. And when we make logical decisions in general in life, things go better. We all know that. When we make irrational decisions, we usually get ourselves into more trouble. Same thing goes for trading, all right? So again, trade the charts. Who cares about all the other noise? It's just noise. Our job individually, me and you guys, it's to make money for us and our families, right? That's what we're here to do. That's what I want to do for my family. And again, that's how we do it. We do logic and data and charts. Okay. Let's talk a little bit more about Bitcoin. We got to get into Bitcoin here, guys. So Bitcoin is bouncing a little bit today. Bitcoin, again, collapsing 3 days in a row. There's something called a 3-bar surge, which oftentimes creates a small bounce opportunity, especially when there's so much bullishness. So there's a couple ways this can go, right? So in general, when I'm looking at a chart that has a 3-bar surge, you start to expect a bounce. You don't know how big the bounce will be, but what you do know is that if it gets back to the confirmed breakdown line now at 92, that would be the most likely reversal point. And so I'll be watching this closely to see if it reattacks 91 to 92 here. If it does, I still anticipate further downside. And I just like to point this out. Yes, the stock market rolled over a little bit. Bitcoin rolled over even more. So if the stock market's bouncing a little bit, then you likely will get a little bounce. But again, I'm still in the camp that the stock market's going lower. I mean, inflation inching up, economy slowing. This is not a recipe for a strong economy. And again, at some point, we all know, and I hate to say this, but we all know we have to pay the piper, right? There's only so much time where you can print money, whether it's the Federal Reserve or the U.S. government, and essentially that's stimulus. And at some point, it's got to run out. And it looks like now the government's trying to take it seriously and cut back a little bit, but there's a repercussion to that. So a lot of us, including myself, are like, listen, we got to get our spending under control. We have to get things, where it's sustainable, right? But the problem is, what we all have to recognize, and I'm a big person on talking truth with you guys, is that there will be a repercussion. Like, you can't just cut out billions, hundreds of billions in spending and be like, oh, the economy will be fine. Like, there's going to be a downturn in the economy. The question is, how bad is it going to be? And my question is, for all those people in politics and everywhere around, is when we get that downturn, are they still going to say, hey, listen, we got to do this. We have to do it. We have to stay the course. Because a lot of politicians out there, they want to go right back to doing what's going to make them favorable and make everyone love them. And there's going to be a period, like I said, we got to pay the piper, and it's going to be tough. But if you're looking at the long-term sustainability of the U.S., it has to be done. It's not going to be fun, but it has to be done if you want America or US or even globe to do well in the next 20, 30, 40 years. All right, enough of my sermon there. Let's get on to gold here and see what we have here. Gold today is falling. Now, I think for me at least, looking at gold, we knew it was overbought short term. It kind of chopped around here, was trying to get to 3,000. I think a lot of people expecting it to, so that's one of the reasons why it probably is pulling back first to shake out those weak hands that jumped in late for that quick move up to 3,000. I still think there's a decent chance we retrace to about 27.90 here, but I still think after that it goes to 3,000 and beyond. I think gold again today makes sense. There's a sigh of relief, and I think this is important, folks. Think about it like this: is that everyone was kind of we had multiple down days in the stock market, and then Nvidia earnings, right? So what are most people doing? They're holding their breath. They're like, oh my gosh, if Nvidia is bad, this is going to just wreck the markets. And so there was probably some gold buying going on there and really keeping gold afloat. Now you have Nvidia earnings out. We see that, okay, they're not amazing where the stock's up 10%, but they're not horrible. The stock's fractionally positive. So it's, okay, I can breathe. We're okay for now. We kick the can down the road. Gold is pulling back as money is coming out and finding its way into some of the stock market. Next up, let's look at silver here real quick. Silver is holding this little upsloping trend line right here. That's the new line in the sand for me here. So if we break that, we get a bigger move down. But right now, again, that looks to be a key support trend line right there. I still don't have a strong bias on silver one way or the other. I guess in general, I'm slightly negative because of the economic factors I'm watching. But for the most part, there's no great trade setup here that I'm just like, oh my goodness, this is an amazing setup. Oil is bouncing today a little bit of a bounce on oil. Still nothing here. Pretty oversold short term, but again, I still think maybe we get a bear flag, small bounce, and we probably still test the 66 major technical support that literally goes back to 2021, right? Or March 2021, right across here, $65 to $66 per barrel. And that's really the level where you want to watch. If we break that, I think it's actually an indicator of the economy as well, and we probably get a much bigger move down. And lastly, natural gas. I still remain short on nat gas. I still like it to the downside. You can see it was down a little bit this morning. Now it's back to the flat line. We'll get inventory numbers out today at 10:30 on that, and I'm still anticipating, whether it's today or next week, I still think there's more downside from this major crossing or near cross of the trend lines on nat gas. All right, guys. I'm going to get to my trading room. Lots of information here and lots of data-driven analysis. That's what verified investing is all about. What I do want to do before I go, I just want to show you the website right here, guys, and so you guys can take a look. If we look at verified investing, remember, this is a data-driven website. So we got all of these articles under financial news are written by my top traders, including myself. They're data-related, chart-level related. You have Alpha Action. This is all free, by the way. Everything on this homepage is free. Insider buying and selling. By the way, is that nasty or what? Like, holy cow. I mean, the insiders just keep unloading. We got our U.S. debt right there, which is something that I think we all need to pay attention to. And then down here, stocks and ETFs charts, crypto charts. We have data, verified statistics right here. And we have pro commodity charts and currency charts down here. The earnings. So this, if you want to know what big earnings are coming out, we have our earnings calendar right here. This is all of the economic data right here. And down here, economic metrics and beyond, right? You just go down, you got your heat maps, you got your greed and fear index. And the idea here, again, behind verified investing is that ultimately I want it to be what I wish I had when I was a new investor and trader 20 plus years ago. If I had this information and I was able to learn charts and learn how to read data and understand, I would have made way different decisions investing and trading early in my career, and I would have been a lot further, right? I mean, I've done well at this point, but it took me a long time to go from a new trader to a pro trader, right? Because I was learning as I went. I made mistakes. I had to learn. Unfortunately, for me, I usually had to make the mistakes at least 3 times to learn from them, but that's just the honest truth. Sometimes I even make them still today. The idea here, again, is that this is for investors that want to move away from FOMO, away from greed, away from emotion to data-driven. And the last thing I want to show on here, guys, just take a look at Advanced Trader Insights. This is only $20 a month here, and it includes all of these reports here, all of these reports. And I just want to point out 3 top trades of the week. Not this last week. This last week we're doing fine on them. The week before I had Celsius there, went up from the alert. I think we made about 33% on that alert, plus about 10% on the other 2. Not every week do I have great ones. Sometimes I have losers as well. But I'm saying ultimately for $20, you're getting 3 trade alerts right here. Ben, my head trader, does a trade every single day for people. Drew does amazing reports on options and everything like that. We have Drew Wolfer here as well, doing his gold update every day. My weekly market deep dive, Dr. B's education, and we have Lawton's small cap action report, all for $20 a month. And the idea there, folks, is it's basically a way for you to test us out, right? You get involved, you see what the technicals are about. It's obviously not nearly as good as what the major services are, where I give my exact entries, my exact exits, as do the other traders, and their daily videos. But the idea is it's a way to start to learn more from us at a very low cost. So I always encourage you guys, check it out. $20 a month, you give it a shot. Worst case, you cancel after a month. No big deal. All right, on that note, I wish you all the best. I will talk to you soon. Take care.